Welcome back, guys. Stock market technical analysis. We're going to get right into it. Before we do, though, if you guys got a trade idea or some sort of a trade setup, leave it in the comments below. Give me an idea of why you like that trade. I'm looking for some additional ideas, so let's help each other out. Appreciate that. Also, hit that thumbs up button. Really do appreciate that contribution to my channel, and I'll continue to try to put out these videos. All right, first I want to start out with the dollar because this is the major thing that's kind of happening right now. The stock market's not doing too much. It's sideways basically, but the dollar is really continuing to sell off. Here's the hourly chart here on the dollar. You can see starting to sell off. This blue line, this light blue line, let me thicken that up a little bit. Right there. That is your longer term support for the dollar. You can see we undercut it, started to test it, started to recover it, but we're failing pretty impulsively. I really think the dollar probably needs to recover really soon. So look for that. Look for some sort of a false breakdown for a quick snap up. It's going to come on the form of a catalyst, I think. And the dollar needs to recover. If the dollar does not recover, then we're going to continue to really hone in on dollar weakness trade ideas, which are commodities, gold, obviously, gold miners. I'm looking for some sort of a pullback in gold and some sort of a correction in the miners, and for the dollar to hold right here for at least short term. But we'll have to watch, because if this wants to continue, then those trades are going to continue to work. So we're seeing obviously silver's going parabolic. The gold miners are doing well. Everything, commodity based is doing pretty well. So that's based off dollar weakness. What I think, though, is going to happen, and we'll flip over to the Qs and the SPY. Here's what I think is going to happen. I can just sense the setup. I think that they're going to not come out with some sort of a stimulus package, or they can't agree on terms or something. And the stock market's going to make another leg down, a nice impulsive leg down. The dollar's going to find some strength, and we're going to just see that kind of reversion to the mean. The market's gotten really far away from its support line, and so I'm expecting a reversion to the mean, coming back to support, and that's going to be a sell-off in the stocks, strengthen the dollar. The gold miners will probably find some weakness. That's what I see the setup being, so I'm looking for that. A way to play that would be like Dust. Dust is a 3-time leveraged gold miner bear fund, and it's just short-term stuff. Longer term, I'm completely bullish on the miners, bullish on gold. I'm just looking for short-term to intermediate term plays. But here's the Qs. All right, now that we're here, Qs kind of just chopping sideways a little bit. Now, we had Microsoft earnings yesterday, and we're seeing some weakness in the Qs. The buyers are not stepping in. Excuse me. And, just chopping around a little bit. So we've got this gap right here at 264.20. And you can see they were struggling with the gap a little bit, starting to roll over a little bit. So let's watch this. I mean, we're still within the range that this could pop back up, chop around a little bit more. We need to see a little bit more weakness. But if we're going to start to see it, we should start to see it soon. And we are in some of these FANG stocks. So let me point that out. Apple. Look at Apple. So here it is. It's breaking down before earnings. Here, the people are selling. They're taking profit, essentially. They're front-running earnings. They saw Microsoft report negative earnings and sell off. So anybody who's in Apple who has a nice profit is trying to take their money off the table before earnings. That's what's happening. Doesn't mean earnings can't be perceived as positive, but ultimately there's a lot of people that have big gains in these stocks, and why risk it, I guess, is what I would say. So here's your uptrend line in Apple, and we broke it the other day, and like I said if we can't recover that soon, we're probably going to start to move down. Now, earnings could be used to pop it up to a back test. That's an objective area to potentially add to a short if you're already short. I'm not short this one, but if it does pop up on earnings, you could short on a back test, and then that would probably be probable that that's the high, a pop or in a back test, and then it's going to start to roll over longer term and start to trend down. Let's look at Microsoft here. Microsoft, yeah, not doing a whole lot. We've got support down here at 205. They've managed to kind of hold it today. Microsoft's still down, but I suspect with Apple looking how it's looking, Microsoft's probably going to roll down and tag this support today at some point. I don't know if it'll break support, but it's probably going to at least run down and tag support. So that puts us down around the 205 areas today. Doesn't mean it has to happen. It just seems probable. Look at Amazon. So Amazon continued to show weakness. Same thing's happening. People are taking profit. They've have huge gains in these tech stocks, and primarily propped up by the Fed. But they're starting to take the profit. They're seeing. And my whole premise around this bearish thesis that I have is, one, technically the market broke down back in 2018. I'll show you that here in a second. And two, the play is not the pandemic play. The play is the economic weakness. The pandemic's just the match that lit the fire, basically. And so I think economic weakness, even though Amazon is clearly a pandemic play, that's playing checkers. That's the next move in front of you. What I say by that is, yeah, okay, Amazon benefits from everyone staying at home and shopping from home. That's the checkers play. The chess play is the next move. And the thesis that I have is people aren't going to be buying as much, whether it's at home or going to a store. They're not going to be spending because they're losing their jobs, or they're afraid they might lose their jobs. So Amazon ran up because everybody thought spending was going to remain the same, but Amazon was going to capture all the market share. But what I'm saying is spending is not going to be the same. All right, there's going to be reduced spending across the board. That will affect Amazon, and especially at prices way up here. So look at Amazon starting to sell off. Probably going to come down and tag this support line. I don't know if I don't think it'll do it today, but could easily do it in the next few days. Here's the play that might work out. It might run down at some point in the next few days, tag this support line, and then earnings comes out negative and this thing gaps down. Just a possibility. Google, weakness, so we're seeing weakness across the board on these fangs. And here's Facebook. Facebook's not too weak. Facebook's about even. But, Snap just reported weaker advertising revenue. Snap took a hit. Here's Snap. Here's their earnings report. They did earnings here, and it took a 8% drop on their earnings based on weaker advertising. So pretty sure that's going to affect Facebook as well. So I would look for a gap. Facebook's got this plateau of support up here. So you need to see it break this 223, I think. So a gap down to 223, something like that. And I'll point this out again for anybody who's new, who hasn't seen this. I try to point it out. I pointed it out in a lot of videos, but here's why this channel is bearish, basically. I started the channel back here in 2018, and here's your bull market trend line, this purple line right here. I'll change the color so everybody can see it. This line right here, and we'll just make it red. We'll make it green so it's a completely different. There. This green line is your bull market. That's your decade-long bull market going back to the Great Recession of 2009. And you can see I'm on a weekly chart. So this is a longer-term time frame. It's like a barge that doesn't move, can't turn quickly. Once it's pointed in a direction, it just heads in that direction. And that's what this does. You can see it tags support, tags support, tags support, support right in here. This is where I started the channel, and this is when the trend line broke. So I became bearish back here because we broke that major support. And the Fed created a recovery in 2019. This is the Fed. This is nothing but the Fed. Corporate earnings were actually falling back here. So this is nothing but multiple expansion is what they say, but it's basically interest rates being reduced and stimulus being pumped. So this is the Fed. This is the pandemic, the big crash. The reason why I was able to call this top is because of this trend line. It had nothing to do with the pandemic. It had to do with the fact that this was a full back test of that broken support line. It was technically induced. And then the pandemic obviously, this was going to sell off regardless. I truly believe that. This would have sold off, maybe not as steeply, and the pandemic caused it to be such a steep drop. But I believe the bear market was going to start here regardless, work its way down, and then the market finds some excuse to continue to sell and accelerate the selling. Maybe it wouldn't have happened as steep. So that's where the pandemic plays out. And then we've got this basically a V bottom bounce in the SPY, and this is again Fed induced, stimulus induced. So again, it's a weak market. Every rally that you get in this market is created by the Fed, and every fall is created by real economic forces. So I don't know which side you want to be on. Obviously, the Fed can bump things up, but the point that I'm trying to make is the trend is broken. This is a sideways, volatile, choppy trend. It is a topping pattern. Volatility increases when you start to make tops. This is your bull market trend. This is the breakdown. So want to point that out for anybody who's new. Let's move on. Let's look at these financial sector here. XLF. This is really weak price action, guys. What I'm seeing here is, look, here's your support line, and we had a false breakdown right here, but look at the recovery and look at what the price action is doing. It's just grinding along the support. It can't find any bid. This is where you have strength. When you touch support and you bounce off. So here's where we started the trend line. We came down, we tagged it, bounced right off impulsively, came back down, and there's no more bounce. It's just grinding along this, just grinding higher, of course, but not able to impulsively really move much higher. That's pretty weak, so we'll watch for that. A break below this 24, depending on where the trend line comes in, would be bearish. XLV is showing a little bit of relative strength, popping up. Now, XLV is healthcare. That's defensive, so just keep an eye on that. But we're up above this resistance line. You can see that I've got it right here. Now, I only have a couple reactions, but I think it's a valid resistance line. We're just slightly up above it. Watch for this to be a false breakout. All right, there's no volume on this breakout. Let's look at the daily here. Look at the volume. As I roll out, here's your breakout. Death volume. All right, this is just not good volume. So look for this to fail. It doesn't mean that it will, but there's a high probability that this fails. That's all I'm saying on that one. And then if it does fail, then look for it to run all the way down to the bottom of the trend line. That's a possible trade idea if that happens, and that's going to be a potential 10%, 9%, I guess, drop. So we're going to watch that. There's nothing to trade on it yet, but watch for the potential failure. XLK, this is a really easy way to watch the tech sector because the trend line's so organized. You can see here on the daily, just walking up this trend line here on the daily. We just, it's really simple. You just wait for a sell signal, wait for it to break. And if I go to the hourly, you can see, we're just coming down to it. So now I don't think it's going to break intraday. I think it's going to gap down, and I think it's going to gap down big. But that would be your sell signal. So the way this might work, doesn't mean it has to, but the way it might work is you're going to get a big gap down on something, some sort of a catalyst. They can't come to a stimulus agreement in the Congress. I don't know what it's going to be, but there's going to be some sort of big catalyst where this will gap down big. Probably the Dow will be down 1,000 points or something like that. And then it's either gonna gap and crap, so it's gonna gap down and then just sell off impulsively, or they're gonna gap it down and then try to do this little fake out move where they run it up a little bit and kind of try to wash out some of the people that took that initial sell signal. They love to do that. They love to jump on, try to wash anybody who takes that initial sell signal. So you have to watch for it. It's really the price action that takes place that day. But I do see probably a gap down coming. And a relatively big gap down in this sector. So I just don't think it's going to happen intraday. Now it could. The market could just completely, sell off during the day. I just don't see it being that easy for the longs. I think that the people that are riding this trend, they usually are going to do a gap down to try to trap some of them. All right, some trade ideas. Zoom. I like this one. I like this as a short. Now we're still above the major trend. Here's your major trend right here. And this thing's just been skyrocketing higher. However, it hasn't come back and tested support for a while. It looks like it's turning down and starting to head down towards support. I'm actually short this. I got a small position on it, short. I like the price action that I see up here. I like this big impulsive sell-off. And if I go to the daily, it's a little clearer. This is a bearish engulfing right here and an outside day. So that's a reversal candle. And we had confirmation of, 4 consecutive selling days right there. Then they did the kickback rally, and now the selling is continuing. So this was your signal that a reversal happened, and you got confirmation. Then you got the counter trend move, and now the resumption of the trend within the bigger trend. The bigger trend is up, but the near-term trend looks like it is coming down to support. And then I'll probably take some profit down here, and then I'll wait for a break of that. If it doesn't break, then I'll just cover the remaining of my trade. But typically, at that time, I've taken a good amount of profit, so the trade will become a winner. I like this. And also, this kickback rally didn't make a higher high. It wasn't able to recover this previous breakdown. So started to roll over, kickback rally right there. Can't break above this candle, starting to resume. I think we run down and tag this support line. That's what it looks like it wants to do. Tesla, I know a lot of people like Tesla, a lot of fanatics behind Tesla. I could care less. But ultimately, I'm a BMW guy. But here's Tesla, and basically holding above this gap right here. This is the gap. So this is what it's been trading off of recently. This gap of around 1550. We broke below it, but not impulsively. I mean, the breakdown below the level, it just kind of hung out right down there, broke back above it. Now it's holding right above it. So ultimately, this thing's just chopping up and down on the hourly. I don't see anything to really trade on this yet. To the daily, maybe this was the back test right here up at 1798, and we're going to roll over. But I think, what I'd want to see is a nice impulsive break of this 1550 level. If we get a nice impulsive break and it can stick and close, it's all about the close, especially on the daily chart, then that might set this in motion to start feeling some of these gaps. And I'll just point these gaps out again. Gap right here, 1227, gap here at 1128, and then a gap down here at 650. So there's what to watch on that one. Redfin, I don't have any trade on this right now, but I'm watching it. So the last trade that we did, we caught this breakdown right here, this nice impulsive breakdown. And that was good for, about a 15% gain. Now we're doing a kickback rally, it looks like. So here's your trend line in Redfin right there. There's your breakdown. If this wants to run all the way up, it's got a ways to go higher. But then that would be your next objective short. Right now, it's just not objective. There's no objective area because, one, we've broken the bullish trend. So it's not a long, but we're kind of in no man's land for a short. So you got to keep watching. I need to see some sort of a breakdown candle, some sort of a reversal candle to trigger maybe the next short. Until then, it just can continue to move higher. So this one I'm just going to watch, and I'll point it out if I see anything. Here's KHC. I like this one for a long. This is the long that I like, and it has relative strength today. So SPY is down, and Q's is down. Q's is down almost 1% now, and KHC is up. So showing relative strength. Looks like a good long to me so far. So I'm watching it. Obviously, this thing could turn if the market turns, and so we do have to watch for that. But so far, so good. Let's zoom out and look at the bigger picture. And to go to the bigger picture, I usually use the weekly, but here's the weekly, and look at this. Here's your resistance right there, 33.52, and we broke above on the week and closed with a breakout. So that's a breakout, and the next week we're getting following price action. And as I zoom in, look at this weekly. Came down and started to roll over, but they stepped in early before support and are starting to bid it back up. So it's starting to move higher. So I think this one at least is going to run up to gap entry at 35.90. And then go back to the hourly here. I'll show you the gap entry. There it is right there. Or sorry, it's about 36.12. But see the big gap right there? That gap's been there since February of 2019, and it's never been filled. So I think we're going to run up and start the gap entry process, and we'll just see what happens. You know, if it breaks into the gap, then maybe we fill. Maybe it breaks into the gap and does a false breakout and starts to roll over. We have to evaluate it as it comes. But as of right now, pretty bullish chart. We've got the inverse, a big inverse head and shoulders. You can see here's your shoulder, here's your head, here's your shoulder, and your neckline is probably this gap. We'll just call this gap your neckline, 36. You know, really your neckline is actually already broken, which is this 33.55. That's that resistance that I showed you on the weekly. But benefit of the doubt, we could just say the gap 35.96, 36.11, somewhere right in there. We enter the gap, start to move into it impulsively, and we can hold. Then look for a nice impulsive run, probably to gap fill, $48. And that's going to be, you know, that's going to be a 33% gain while collecting, 5% dividend yield. Not bad. Here's silver. I know silver's been getting all the rage because it's gone, kind of parabolic. I don't like trading silver. That's just my thing. I like gold. I like to trade gold. Gold is easier to chart. Silver seems to kind of lag gold. It just doesn't do anything. And then randomly out of nowhere, it just explodes higher parabolically. And that's just really hard to trade. You don't know the timing of when that's going to happen. So I prefer gold. It tends to trend better, where silver tends to explode exponentially and catch a lot of retail traders jumping on the momentum. Here's silver though. We're going to have to watch this. Lots of gaps, two big gaps right here. So SOV is what I'm using. We've got gap here at 1980, and we've got a gap here at about 1850. I'd look for at least this 1980 gap to fill, possibly even this 1850. Look for this thing to roll over and spike down and fill these gaps, and then it could move higher. But I do think you're going to get a gap fill. Going to the daily here, you can see I was trying to chart this a little bit, looking for some sort of resistance. So here's what I could come up with. On the daily, you can see as I zoom in here, see this gap back here? You have this gap around 2078. There was another gap right here. It held resistance right in here and didn't quite get there. So it's not the cleanest level. Silver doesn't chart that great. It could be down here, maybe the level's right down here, but it's somewhere in this range from 21 down to 2050. And I think we're at that area of resistance right now. If I zoom back out and show you where we're kind of at, you can see that we've just spiked right through it, but there's been no pullback. So spike through it. Let's see how the day closes. If they sell off and it can't really close too much above this, look for one of these gaps to fill, maybe both. On gap fill though, that's probably an objective area to buy it. But again, I don't like to trade silver unless there's something just completely striking. I prefer to trade gold. However, I do own a little bit of silver, not much, but that's physical, just sits in a drawer, nothing major. And we'll wrap up with this Philip Morris. I've thrown out a lot of different trade ideas, a lot of different charts, so things to watch, and nothing that's just striking as a complete entry right now, but things to watch. I like to point these out before the entry happens so that when it happens, you can get the best positioning. That's key. I think the trading is getting a good position. When you have a good position, it lowers your risk extremely and gives you the best opportunity for success. So here's Philip Morris, and again, looks like it's starting to be bullish. Here's your downward channel. That's been, Philip Morris is in a bear market. You have a downward channel. We bounced off the bottom of the channel right here around 55.68, and now we've just been chopping here. Looks like we're going to get a breakout. You can see we've just been tapping this resistance. Got close here, got close there, hit it right there. looks like we're going to start to see some sort of a breakout. And we're just going to watch that. You know, that might be a bullish play. This thing's paying a dividend of about 5 or 6%, I think, as well. So kind of the same setup as potentially KHC. People might be looking for these safe dividend plays and rotating out of tech. That might be what's happening. So we'll go ahead and wrap it here. Thanks, guys. Appreciate that. If you haven't hit that thumbs up button, do it before you take off. I do appreciate that. Catch you on the next one.